Hello guys, it is June 12th, Thursday. Fascinating, extremely low volatility market conditions continue. As you could see, the last few months we had the lowest number of trades on record. When markets on monthly charts are so overextended, what we will review in just a second, it is especially essential to play by the rules. Corrections will become more and more. Minor trends will become more common. Here is the test of knowledge of the price and the importance of preservation of capital. Fewer trades, better results if you're expecting corrections. It is so much better not to take a trade than to take a corrective negative trade. So far as of June 12th in the trading room, we completed 9 trades. 7 trades on oil, reached first target, and multiple times we do not take any profits off the table until decision point 2, and multiple times somewhere in between reversal zone and decision point 2, as ratios remain very, very important. Secondly, S&P. 9 trades, same number of trades, 7 positive. 7 trades reached target 1, and again multiple times we do not touch target 1 if ratios do not allow it so. As you witnessed, I had taken reversal zone 1 tick outside today as my first target, because that's what ratios spelled out, and that's what I had to do in order for the trade to make sense. So that's all there is. That's what's playing out so far as a result this month. So let's take a look at larger time frames and let's see what markets are dying out. Here's a phenomenal rally that started since 2009, and frankly, since this is my very first few months being exposed to such low volatility in day trading, since I didn't day trade till 2009, I am a bit floored, frankly, because it's been ultimate torture. This bullish rally is coming to complete stall. Massive, phenomenal rally. Powerful volatility is taking traders who trading with indicators to a massive problems, because no indicator will tell you when market in correction. Every single ultimate high on S&P is finding sellers. What is the problem? The sellers are not powerful enough. Until we see powerful confirmation on larger time frame, this will continue to be extremely slow and extremely challenging day trading conditions. That's exactly why we're making huge changes, and that's exactly why we'll be trading only with our students in the month of August. So if you have enough of indicators, if you have not tortured time, join the gang, as we always have a lot of fun, and we will not be babysitting corrections. So, what has S&P done this morning, and what I accomplished in the trading room? This was S&P this morning. This morning S&P gave me only 2 aggressive long trades. This is my long trade. This is exactly where it ended. This is what we know to respect for the trend to have a conservative meaning and continue further up. This is where my 1-point trade had ended at this level. Then market struggled immensely, giving us only bullish correction. Second trade on S&P, very aggressive, didn't play out. Again, there is nothing phenomenal spectacular about this structure, because when you come to the markets and you see bearish trend at these levels, you know the only prudent thing to do is to wait for solid continuation structure. That is not what S&P had done. S&P had done only bullish corrections, as witnessed clearly on smaller time frames. The dance is on. The fight plays out. Buyers are weak and sellers are exhausted. No indicator on the planet will tell you that. There had not been a conservative trade setup on S&P in this market conditions. Short played out marvelously pre-market. Reminding you, if you know the rules, you don't have to wait for hand holding. Let's review what oil had done as oil continued fascinating corrective love. No trades on oil this morning. This is oil since market open. Ouch! Did indicator tell you to walk away from computer? Did the indicator tell you that it has been very, very painful and very confusing for oil? Because oil had been dancing at reversal zone, continuously staging this corrective love. So that's all there is. The powerful reversal on oil was pre-market, and this was the battle on oil, where oil had not done any meaning whatsoever. And that's it. Here's oil monthly, and this is the levels oil had reached on monthly chart. We'll see incredible volatility on oil once it will crawl up further up to reversal zone. And again, very, very powerful formations on oil pre-market. That's why I encourage you. If you know the rules, you have to start trading as of 6 a.m. EST. This is PST. 6 a.m. EST is very powerful, beautiful rally, beautiful long trade. When you come to the markets, ouch, corrections, no meaning. Respect what market is telling you. No trade on oil. You preserved your capital if you played by the rules. And again, the reason why oil is so comatose is because bullish rally that started on daily from decision point 1 picked up this steam and struggling, breaking through reversal zone 3, taking only corrective structure when it comes to daily time frame. So that's all there is. Respect corrections and play by the rules. On S&P lately, market close had been phenomenal. As I spelled out yesterday, if you remember what played out on S&P. Let's recap. As yesterday was truly fascinating and fantastic day on S&P. This is where S&P was yesterday. This is where we've taken short into, and this is where we've taken long from. And what did I say? Monitor reversal zone 3. If you know the rules, enjoy the rally. It had been constant, market close, very powerful formations. That's it. Pure price for entry and Fibonacci for exits. Next class starts Monday. Look forward to seeing you there.